Let me say something that is going to make a lot of you watching uncomfortable. Most of the people who start prop firm trading are never going to make it. Not because the markets are too hard, not because the prop firms are scammy, not because the strategies do not work. They are going to fail because of 5 specific things that they are doing right now, today, that they do not even realize are the problem. And here is the most painful part. Most of them are 1 or 2 adjustments away from being profitable. I see this all the time. Traders who are so close, their strategy is fine, their understanding is fine, their setups are fine, but they are doing 2 or 3 things on the side that are quietly destroying everything they build. And before they figure out what those things are, they get tired and quit. I have been prop trading for 8 years, over $2 million in payouts, about 1,000 individual withdrawals, and I have mentored a lot of traders along the way. So I have seen this from both sides. From my own struggle for the first 3 years where I was the one making these mistakes, and also from watching hundreds of traders make the same exact mistakes after me. Today I'm going to walk you through the 5 mistakes that disqualify most prop firm traders from ever making it. Not some generic advice, specific patterns I see over and over again. And if any of these hit close to home, that is the point, because seeing them is the first step to fixing them, and fixing 1 or 2 of them is probably all that stands between you and consistency. 5 layers into this one, so let's just get into it. Mistake number 1 is wanting to make a lot of money fast. This is the one that ruins more traders than any other thing. And I want to explain it carefully because most of you are going to hear it and think, well, that is not me. I am patient. I understand it takes time. Yeah, you just say that. But your behavior says something completely different. Here's how this actually shows up. You start the prop firm challenge. You pass it, you get funded. Your first week on the fund account, you take a small loss on a normal trade. And in your head, you start doing the math. Okay, if I just hit 5% this month, that is $2,500. And if I hit 10%, that is $5,000. And once you start running those numbers in your head, you are no longer a trader. You are just a person trying to hit a financial target. And the second you become that person, you start making decisions that have nothing to do with what the market is actually showing you. You take trades you normally would not take because you need the money. You size up because you want to hit the target faster. You hold losers too long because closing them out kills your plan for the month. You skip your rules because the rules feel slow. This is the deepest mistake in trading. It is not technical. It is not strategy. It is just an expectation problem. You come in expecting fast money and you are unwilling to accept that this takes years. So everything you do is shaped by that expectation. And eventually it blows up because the market does not care about your expectations. The fix is not to think positive. The fix is to genuinely accept that this is a multi-year journey. That your first year you should not even be thinking about money. Your first year should be about not blowing accounts. Your second year about consistency, and your third year about scaling. The traders who make it are the ones who stop trying to skip phases. If you are watching this and your goal is to make $10,000 next month from a $500 challenge, I am telling you straight, you are not going to make it with that mindset. Not because you are not capable, because the mindset itself is what blows the accounts. Mistake number 2, sizing up after wins. This was the mistake that almost ended my career multiple times. It is the most common mistake I see in funded traders. Not in beginners, in funded traders. The ones who pass the challenge and are sitting on a real account. Here is how it works. You take a trade, it wins. You take another trade and that wins also. And third one wins. Now you are 3 for 3 on the day. And something in your brain kind of shifts. You think, okay, I'm clearly seeing something here. The market is giving me what I want. Let me press a little harder. Let me size up just on this next one because the setup is even cleaner than the last 3 trades. And then you size up and the trade goes against you. And because you sized up, the loss erases everything you just made plus a chunk of the account. 3 winning trades and 1 losing trade and you are net negative for the day. That is the math of inconsistent sizing. 3 wins of 1R and 1 loss of 3R is still a losing day. This is what blew every funded account I had in the early years. Not bad strategy, not bad analysis, just sizing up at the wrong moment. The exact moment where I felt most confident, which is also the exact moment my judgment was the worst. The fix to this is brutally simple. Same size every trade, always. No exceptions. I do not size up because I feel confident. I do not size up because the setup is cleaner. I do not size up because I am on a winning streak. Same size every single time. I know that sounds boring. That is the point. The traders who make it are the boring ones. The ones who never get rewarded for being a hero, because they never try to be a hero. They just take the same setup over and over and let the math work itself out. If you find yourself adjusting your size based on how you feel, that is a flashing red light. That is the exact mechanism that disqualifies most founding traders. Build the rule around it. Same size, every trade, no exceptions. Until that rule becomes automatic, you are at risk. Mistake number 3 is refusing to admit when they break their own rules. This is the ego mistake, and it is the one I see most often in traders who are smart. Smart people do not like being wrong. So when they break a rule and the trade works out, they tell themselves they did not really break the rule. The rule was just flexible, or they had a good reason, or the situation was different. Here is what is actually happening. You set rules for yourself. You break them, and instead of looking at that honestly and saying, I broke my rule, you find a story to tell yourself about why it was okay. Maybe the trade was good enough. Maybe you had a different read on it. Maybe the rule does not apply in this kind of market. Every story you tell yourself is a small permission slip to break the rule again next time, and next time, and next time, until eventually you have no rules anymore. You just have a strategy you sometimes follow and sometimes do not. And the times you do not follow it are exactly the times you blow up. The traders who make it are the ones who can sit with themselves after a session and say, well, yeah, I broke that rule. That was on me. Not the market, not the setup, just me. They do not enjoy admitting it. Nobody does, but they do it because they know that the only way to fix something is to first see it clearly. If you cannot do that, if every time you break a rule you have a reason ready that explains it away, you are not going to make it. Not because you are bad, because you have made it impossible to learn from your own mistakes. And in trading, the mistakes are the only teacher you have. For me, the breakthrough in my third year was when I started journaling, not just trades, but rule breaks. Specifically, I would write down every single time I deviated from my plan. And looking back at that list weekly, I could see a pattern. The same rule, broken in the same way on the same kind of day. That seeing is what allowed me to actually fix it. You cannot fix what you will not admit is happening. And in this business, your willingness to admit your own mistakes is just the entire game. Mistake number 4 is trading multiple accounts before being profitable on one. This one comes from the same place as mistake 1, wanting more faster, but it shows up differently, and it is one of the fastest ways I see traders eliminate themselves from ever making it. Here is the pattern. You pass your first profit challenge. You get funded, you hit 1 or 2 payouts on the same account. You are not yet consistently profitable. You are still learning how to actually run the account properly, but you are excited. So you take some of the payout money and you buy 3 more challenges. You think, if I get all 3 funded, I will multiply my income. Wrong. Completely wrong move, and here is exactly why. Running multiple accounts before you are consistently profitable on one does not multiply your income. It multiplies your mistakes. The exact behaviors that almost blew the first account are now happening across 4 accounts. So when the bad week comes, instead of 1 blown account, you have 4 blown accounts. You did not scale your income. You scaled just your destruction. And I did this myself. I remember at one point picking at around 50 fund accounts. And when I had a bad week, I lost multiple of them at the same time. Because the same mistake I was making on one account was being made on all of them at the same time. That experience taught me something important. You should not add accounts until the existing one is genuinely consistent. And consistent means 3 or more payout cycles in a row with no rule breaks, predictable behavior week after week. Until you have that on one account, you have nothing to scale. You are just multiplying an unproven process and praying it works at scale, but it will not work. The fix is simple: patience. Get one account locked in, then add the second, stabilize that, then add the third. Slow building beats fast scaling every single time. And the traders who refuse to accept this, who keep trying to scale before they have proof, are the ones who blow up over and over until they finally quit. If you are running 3 profit challenges right now and you are not yet consistently profitable on a single fund account, just please listen to me. Cut it down to 1. Master that one account. Then add the next one. You are not falling behind by going slow. You are catching up by just stopping the bleeding. Mistake number 5. Trying to recover losses from a previous account. This one right here is the silent killer. Most traders do not even realize they are doing it. Here's how it works. You blow an account, you feel terrible, you buy a new profit challenge, and from the moment you start a new challenge, somewhere in the back of your head, you are not just trying to pass it. You are trying to make back what you lost on the previous one. That subtle shift right there in motivation changes everything about how you trade. You take trades a little faster than you should. You hold losers a little longer because you cannot afford another loss. You size up at the wrong moments because you need to make ground. The new account is not really a fresh start. It is a recovery mission, and recovery missions blow up. I have done this many times. In my second and third year, I would blow an account and immediately buy another one with the only goal of making back what I just lost. And every single one of those accounts blew up faster than the last one because I was not really trading. I was emotionally chasing. The fix is to mentally separate every account. Each new challenge is its own account. It has nothing to do with the previous one. Whatever happened on that previous account is closed. It is gone. You cannot recover it on this account. You can only run this account well or just run it badly. When I finally understood this, when I stopped trying to make back blown account money on the next one, that was when my consistency actually started showing up. Because every account I started was just an account, not a recovery thing, not revenge, just a fresh challenge with the same rules I always follow. If you have blown an account in the last 6 months and you are about to start a new challenge, take a moment and ask yourself this: am I starting this with a clean head, or I'm starting it because I want my money back? If it is the second one, do not start it yet. Just wait. Take a few weeks. Get to a place where the previous account does not affect your decisions on this one. Otherwise, you are just going to repeat the cycle. Recovery trading is the deepest psychological trap in this business, and almost everyone who fails at profit trading falls into it at some point. Knowing what it is, actually being able to spot it in yourself, is half of what protects you from it. You can pause the video right here and ask yourself which one of these are you actually doing, and if you said yes to 2 or more, that's where your fix is. So just to bring all 5 together. Mistake 1, wanting to make money fast. The expectation problem that warps every decision you make. Accept this is a multi-year journey or just do not start. Mistake 2, sizing up after wins. The exact moment your judgment is worse is the exact moment most traders bet the biggest. Same size every trade with no exceptions builds the rule that protects you from yourself. Mistake 3, refusing to admit when you break your rules. Every story you tell yourself about why it was fine is a permission slip to break it again. The traders who make it are the ones who can look at themselves honestly. Mistake 4, trading multiple accounts before you are profitable on one. Scaling an unproven process multiplies your blowups, not your income. Master one, then add the next. Mistake 5, trying to recover losses on the new account. The silent killer. Every account you start with revenge in your head is going to repeat the cycle. Each account is its own account. Period. Now here is what I want you to take from this video. Most traders are not failing because they are bad. They are failing because they are doing 2 or 3 of these 5 things at the same time. And if they could just stop doing those things, even one of them, they would probably get the consistency. They would not even need to learn anything new. They just need to subtract. That is the painful part of this. You are probably not as far away as you think. You are probably 1 or 2 adjustments away from being a different trader. The question is whether you can be honest enough with yourself to identify which mistakes you are actually making and disciplined enough to stop doing them. 8 years and over $2 million in payouts has not made me a special person. It has made me someone who eventually figured out which mistakes were ruining me and stopped making them. And that is it. That is the whole game. Most profit traders will never make it because they will never see this in themselves. But you watched this video, so now you cannot say you did not know. Whether we actually do something about it, that is completely up to you. And that is what most traders never figure out. If you want a system that helps you spot these mistakes in yourself before they cost you accounts, I have a mentorship program called the Profit Blueprint. It has real accountability, real guidance for traders ready to do this properly. You have a link in the description if you want to apply. And if you are looking for a program that actually pays out within minutes, I recommend Hola Prime. They have a 0 payout denial policy and they just got a full audit done to them. This is the only program that had a verified third-party audit to their payout process. You can use the code NFX for 30% off. The link is in the description. Thank you guys for watching. See you in the next one.